What about the impact of the deficit and stimulus on the dollar? I want to get some insight from one of the world's most accurate currency forecasters. Stephen Gallo is head of market analysis at Schneider FX, joins me in the studio now. Good to see you again, Stephen. So we'll talk about Greece in a moment, but QE2 drawing to a close. How's that going to affect the dollar?
I think to a degree it probably already has. I think this has been something that's been expected for a while by the markets. The question is, now that QE is coming to an end, what happens to the fiscal risks in the United States? Because QE is actually a way around a crisis. It avoids the pain. If the Federal Reserve is doing QE, then there's less pressure on the government to tackle the fiscal challenges. If they don't tackle the fiscal challenges, and if the Fed doesn't do another round of QE, the dollar is going to be very vulnerable, more vulnerable than it is today.
But in the medium term, it'll benefit the dollar initially?
No. I think no, not necessarily. I think now all eyes of the market are firmly focused on the U.S.'s fiscal problems, and if the Federal Reserve is either unable or not willing to do more quantitative easing in the form of asset purchases, there could be a risk of price drops in the Treasury market, and obviously the knock-on impact that would have on the dollar. It would be negative. So
do you think the distress that we've seen right here in Europe could delay that somewhat?
Yes. I think the longer-term view that now I have in place for the euro-dollar pair, two things to note. The first thing is that based on the political movements within the Eurozone today, I think so far, based on the lack of push towards more macroeconomic governance, more surveillance of cross-border capital flows and balances, the path that we're on today means that ultimately the euro may suffer in terms of its reserve status. If they don't do something soon, it will suffer. And so, that was one of the main reasons for the downwardly revised view in terms of the outlook. The second thing is that if the euro is going to be challenged as a reserve currency, more so than it already is, that will just buy more time for the dollar. U.S. borrowing costs will probably remain lower. Washington will probably have more leeway in terms of tackling its fiscal problems.
Okay, so as long as Europe remains in trouble and there's division in the Eurozone,
it will delay the secular reserve shift away from the dollar, if that happens.
Yeah, and I guess, do you think delaying it might buy them more time to actually tackle these fiscal problems? I mean,
usually when people have and politicians have the benefit of time, they usually don't take action. And I think that's one of the reasons why we're in the situation we're in today.
So it sounds like you're getting, in the long term, a little more bearish on the euro, Stephen, with this sort of revised outlook.
What I would say is that if they don't tackle the problem soon, and I think this is the issue, Maryam, if they don't move more aggressively towards setting up a centralized organization which can control the fiscal transfers, monitor the imbalances, control cross-border capital flows, and impart sanctions when countries don't comply with regulations. If they don't do that very rapidly, the euro is going to struggle.
And there isn't enough clarity that they're actually going to do those things.
That's right. That's right.
And Stephen, as we draw to a close, a very quick one on the pound.
Yeah, the pound is struggling. What I would say is that Britain and its currency are essentially at the devaluation point. If this were a world of largely fixed exchange rates, gold standards, we would be at a point now where we would be speculating that the gold standard would be dropped, convertibility would be dropped. So essentially, we could be at a major turning point for sterling.
Okay, great to have you as always with us. Thanks very much. We appreciate your analysis. Stephen Gallo of Schneider FX.